Always.
Okay.
Well, stocks, if this happened, on a track to stop what had been a 3-week losing streak, even though we mightily came back at the end of last week, it wasn't enough to make it positive. The read on all this from Walser Wealth Management CEO Rebecca Walser. We've also got right now National Review contributing editor and notorious fashion play, Deroy and Murdock. Ditto after the bell co-host, my buddy Connell McShane. Welcome to all. Rebecca, let's go into the significance of what Deirdre was pointing out. A lot of people just with a yawn say, all right, well, we'll extend the deadline for the tariff hikes. But if the Chinese have agreed in principle to this idea that they force companies to cooperate with Chinese companies, that would be a big deal, right?
That's one of the seven deadly sins of China that we've gotten laid out all the time by Peter Navarro. So yes, Neil, I'm so glad it's more than soybeans. I mean, right. I am just so excited that we're not going to be just talking about soybeans.
And we should point out the extra purchase of soybeans, right? Yes. I mean, it would still not get us back to the levels we were at a year ago. But
no,
go ahead,
that's true, absolutely. So yes, we just expected sort of a pause, maybe a de-escalation, and a temporary hiatus of what's supposed to happen in escalation next week. So this is really tremendous. I mean, this is going. I mean, it's no wonder the market is reacting so positively. This is awesome. I'm so excited about that. That's a great opportunity.
All right, well, calm down. No, I'm kidding. Deroy, is it your sense though that the markets could be getting a little ahead of themselves? I always say that they buy on the rumor, they might have to sell on the fact, or we do have these sort of civil reactions in the market, soaring at the slightest bit of good news. Although this is substantively good news, and then just tanking on the slightest bad news.
Yeah, I think the markets can be a bit temperamental, a little bipolar, if you will.
Right.
But this is terrific. If this is for real, then the Chinese are going to say, look, you come into a company, you don't have to have a Chinese partner. The Chinese partners, as we know, sometimes come in at 2 in the morning and copy the business plan and the IP and whatnot, and off they go with the brand new company. So,
but this would be for new companies, right?
It would be, but I mean, it's a great step forward. I've never heard in all the time that we've had relations with China, we can go in and open your own business without having a Chinese minder, if you will, in the room with you all the time. So if they're really going to stick with this is a huge step forward, and if we can move it from financial services into other industries, all the better. So
it makes sense from
very good
China's point of view and the way it's structured. If Deirdre's reporting it and providing the analysis, which I thought was key on Hong Kong, because you think about this years ago, well, even earlier this year, maybe the thinking from the Chinese point of view on Hong Kong would have been much different than that. It is a free and open society and allowed them in many ways to keep their society more closed because, financial companies and other companies were able to operate, like they were in the Western world in Hong Kong. But now there's a different relationship between the two. So you have China with its own semi-autonomous region looking at it and say, hey, how can we stick it to them? Which is a very, very odd point of view for them to be in, but it is one that's there. And we asked for months, how would the Hong Kong protests affect the Chinese trade talks with the United States and China? Maybe, again, we don't know yet, but maybe this is the way, and I don't think a lot of people would have thought of it. So,
Rebecca, I'm wondering who benefits then. I mean, you could say today in the entire market, I think 10 of the 11 S&P sectors are up, minus utilities, and that's not surprising. You don't need a flight to quality or a haven in an environment like this, ditto bonds. But technology, with all of this, has had an enormous run-up this year, even with all that noise, even with investigations to crack down on Facebook and Google, Amazon to a limited degree, Apple now in and out of all-time highs. So is that, just pushing it too far? I mean, do those stocks really have room to grow much further in this environment, given the fact that they keep running up?
Well, Neil, we thought that the stock market, the .com, run up was, this is the new high, and then obviously we have now smart apps, smartphones, and everything, self-driving cars. All these things all technology is always evolving. It's always an evolution.
And we should say, and they're the exception with a lot of those ones that ran up, right? I mean, they didn't have the earnings or the justification for that run. Those names that I mentioned, whether you like the companies or their style, that doesn't matter. They have a successful business model.
Yeah, I mean, a lot of these stocks go up and away, even though the companies don't make any profits. I always find that it's a pretty cool magic trick. I think one of the reasons that stocks are up exactly 400 points, not just what's happening in China. But I think this may be Wall Street voting on impeachment. We just saw yesterday the president of Ukraine saying there was no blackmail. I didn't know about the military aid being held back. So rather than growing, I think that story is actually shrinking, even though the Democrats are screaming, yelling about it. The substance beneath it seems to be weakening.
You might be right, but Connell, it's always something smoking right now. The quest to get the president's tax returns, another court saying you have to hand them over, Mr. President. This could go all over the Supreme Court. We don't know.
Probably.
These two guys, associates of Rudy Giuliani's, of course, apprehended by the government here. So there's always something festering, but, Deroy's point, I mean, the markets are ignoring it.
And I think I could be wrong about this, but I think they would if the news was good or bad. I've been skeptical of the impeachment inquiry's effect on, just equities of the United States from the beginning. So I don't know that it has much to do with it.
It went up through the whole Clinton thing.
Of course, and it may go up through this. Even, this week, the data showed, our own data from Fox, that the likelihood of the president being impeached and removed from office is actually growing more popular with the public. That's shaken off by the markets as well. So even when the news is good or bad, I think we're still reacting to things like China and the other big factor that still hangs over the markets. And the question is even bigger today: how will the Federal Reserve interpret all of this? For now, everybody seems to be thinking they're going to keep cutting like crazy. So,
but I wonder if they cut as much, Rebecca.
I don't know.
Yeah, I mean, they now all of a sudden, if you have anticipation of a strong trade agreement or stronger, you could make the argument that the Fed doesn't have to move, certainly not as aggressively.
That's been my argument for a while, Neil. I have a real cautious bent on a federal funds rate of 1.75 to 2. How much power do we have if something does go wrong, if China blows up like it did in May, and we don't get a deal at the end of the day, they don't sign on the dotted line, and then the market's going to drop, and what do we do with that? What does the Fed do with that at a 1.5% federal funds target rate? I mean, I think we have to be cautious.
Especially if things are really so great, or if we think they are, this China deal is what it is, and we don't know yet, but if presuming that it is a positive for stocks, and consumer confidence comes in today better than expected again, so now you're saying to yourself, we really need lower interest rates. I know the odds of a quarter point
I've always wanted that from the outset, whether we had a need to cut, for other reasons, but
yeah, well, we also saw some new figures on median household income under President Trump, up 8.2%. This is enormous. About $5,000 per household. That's serious money. So that perhaps speaks to maybe the Fed keeping its ammo.
Yeah, I always argued Wall Street is not a bastion of the red or blue. It's green. They love money. And I said it so many times, but through Bill Clinton, they didn't want him thrown out, right? They keep the good times rolling.
It's good for the economy, actually, wasn't it?
Yeah, but the odds have come back a bit, but they're still thinking they're going to keep cutting rates, although the market wouldn't be up as much as it is today. I know as of Wednesday, I think it was like an 80-something% chance of a quarter point cut at the end of the month. Last I looked this morning, it was still 65 or something like that, two-thirds.
But it's dropped a little bit.
It dropped a little bit, but not. They're still thinking. The majority still think that we'll see more cuts.
All right. We're going to pursue that and get a little bit more on what's happening on the